talk about currencies right now, and Chris, just start off by talking about the infrastructure budget that they're trying to get passed, and we have to look at things like this. I have absolutely zero problem with stimulating the economy, and the economy needs to be stimulated. But we have to go into the details of the actual budget, and we're not going to get into that right now. But the biggest problem we have right now is, of course, we have inflation high. The central banks cannot raise rates. They're holding back because the economy is not where it needs to be. We cannot go ahead and raise rates when the economy is struggling the way it is right now. So we've got a couple of issues here. If they're going to be printing money to pass these bills, this is going to mean a lot more pressure on I'm not just talking about the dollar itself. We're talking about all central banks. Anytime the central banks start intervening to try and stimulate the economy, what's going to happen is going to put pressure on the actual currency itself. So I want to have a little bit of conversation around this because we're talking about the stock market. Stock market's been in some rallies. Last week, we had a bit of a sell-off last week on the stock market. I haven't looked this week to see if how's the stock market? How did it open this morning? Was it up this morning?
It's flat today. It's flat today.
Flat.
Yep. I think honestly, Gary, I think we're gonna be waiting until Wednesday, Thursday debt ceiling. How's that resolved? Does DC get do they get to pat each other on the back and say job well done? Sorry we had to stay so late and we were a-holes to each other. But I think it's going to be a lot of uncertainty because last week we started to see the precursor, right? Last week was like, oh crap, there's some uncertainty, and so we gapped super aggressive on Monday and then spent the whole week fighting back. The Fed tried to reassure the markets, but it wasn't enough to reassure new highs, and it wasn't enough to really scare the markets into fresh lows. So that's why I said at the very beginning, watch those highs, like watch the all-time highs we've seen in the U.S. markets, but watch last week's lows, and that's really the play for what's next.
Yeah, because if you look at the chart, if you look at the dollar index chart, the dollar index chart currently.
I'm going to push back on the idea that the economy can't handle an interest rate. I'm going to say BS. I think our economy is hot, is great. I think people are flush with cash. I think businesses are making more money than they ever have, and we have a stock market and a real estate market sitting at all-time highs. I think the opposite is true. Man. I think this is as good as it gets, and they're going to be way behind the curve. And we're going to go through a recession, and then they're going to be out of bullets. I think that's my big concern is that they didn't raise interest rates fast enough to slow down what could be happening.
Yeah. And I think they will. I think that, all the central banks are very calculated with how they're doing it. Actually, one of the plays this week, Gary, I'm not sure if you guys like this one or if you looked at it, but one of my favorite plays this week actually was the pound US dollar. I've been kind of, that's been on the shelf for me for the last couple of months, like not really doing much with a pound dollar, but that 3,600 level is so solid for support that I like long. I mean, if we're talking, let's say the sterling gains bid because we're going to look at Bank of England raising rates. If we start to see across the board, the pound is, buy the rumor, sell the facts. So BOE is going to be a little bit more hawkish, a little bit more, favoring a rate hike in February and June, I think, of next year. I mean, look, it's pretty obvious. If I'm long now at 37, my stop loss, as long as the daily candle doesn't close below 36, I think we have upside potential to 39 and 1.40, potentially all the way to 1.42. So we're looking at about 100 pip risk for a 200 to 300 pip, I'd say conservative upside, all the way up to 42 could give us a 500 pip upside with a really straightforward setup. So that was actually one that stuck out to me this week for, getting long pound dollar and just making sure it stays valid.
Yeah. I'm looking over here.
I hear some. Yeah, I don't know. What are you thinking, Gary?
No, I agree. I do agree.
Stop loss. That's all I'm saying. Like usually I'm trading areas and I'm like, all right, I'll scale in, I'll level in. But this is like, look, it's wrong. If it's below 3,600, I'm out. That's it.
Yeah.
Like if I'm right, I'm right. If I'm wrong, I'm wrong. Like I'll take it as one of those binary trades.
Yeah, no, I'm gonna agree with you on that one, Chris. Because if I look over here on the chart again on the 1 hour, we do see an absolute swing from last week. Last week came back. We had a nice little rally. Then we had a pullback. Obviously, we had a lot of rates coming out last week, decision making for the Feds, and then we saw a pullback later part of the week, which gave opportunities for traders that were not in to get in on this trade. So. Buying, absolutely. We're definitely going up. If you look at the daily time frame, is also showing that support that you just mentioned there, Chris. We don't have the divergence. I don't have the divergence on the chart here that I'd like to get excited about. but it is holding at that support there at 136.73. It looks like it. So anything above that, 136.73. If you like to write down numbers, write down that number, 136.73. Stay above that. I do agree with you, Chris. I think we're gonna rally up. I looked at the dollar. The dollar, if you go to the dollar index and take a look and see what the dollar index is doing, we've got a lot of range-bound trading on the dollar index, but we are expecting a little rally on the dollar, but that's before, that's after we have actually a dip. So we are expecting a dip first before the rally on dollar, and that could be that bullish move that we're going to see on the pound US dollar. So I do agree. And you can see that the dollar is in an overbought condition, so there is correction due and a sell-off on dollar. So pound US dollar, I like the pound US dollar buy on that. Yep, absolutely. Yep.
Cool.
Awesome.
Yeah.
I've got one for you guys. I got a question. I'd love to get your guys' opinion on. My favorite trade for the week, and I think this is just more than just a weekly trade, is it goes back to, I think we've been talking about this for the last few weeks, about trading currencies that are, right now, a lot of what we talked about up to this point is, we think, but we're not 100% sure, right? And we can never be 100% sure. But there's a lot of question mark, like, are we going to go through inflation or not? I like the Aussie CAD. I like the Aussie CAD buy in this area. I like the weakness that we've seen over the last few weeks as an opportunity to start looking to buy in. What do you guys think of this trade? I'm looking at a push down. If we get a push down into about.
Did you say Aussie Swiss?
Aussie CAD.
Aussie CAD, gotcha.
Yeah, yep. So here's my exact trade that I'm looking at. So I'm looking for a push up over the course of the next, I don't know, let's say 1 to 4 weeks. Again, I don't think this is a just for this week trade, but I like it. It's the top trade in the money flow trading room. I'm looking for a push up to 94.45. Right around that level. I think we've got some nice supply sitting at that level. We have a little bit of a pocket sitting there that I think we could go back up and tag. 94.45 or so. This is the way I'd like to get in. I'd like to kind of bracket it. I think we could see a little bit more weakness to the downside, maybe another 30, 40 pips. I want to start buying at 91.65 if we push down, or if we are able to rally up and daily close above 92.13, I want to buy there. So I want to buy at 91.65 or a daily close above 92.13, target of 94.45 and a stop of 91.
So, okay, so you wanted to close above what price, Tyson?
If we get a daily close above 92.13, that'll kind of be my confirmation that the bulls are kind of starting to take control.
Yep, I like it. That's
all right,
above
so
today's
92,
high, right?
Yeah, above today's high, basically.
Yep. Okay.
So today's high is right here, 92.13. Okay, so if you want to close above that level.
Yes, close above that level, or if it doesn't close above that level and it sells off down to 91.65, I'll buy there also.
Okay. Okay, and I'm going to agree on the direction. I believe, yep, I absolutely would agree that we're going long. The entry point on this, man, just buy right now. Buy right now. And let me tell you why.
I like trading it with the breakout or with the bracket, because I'm kind of, if I got into both, I'm kind of buying right now, right? But I'm waiting for the market to kind of give me that, either come lower and buy or break above and buy. If I got into both trades, you're right. It's basically a buy right now.
Right. So I'm going to go ahead and throw out an opportunity here on the Aussie CAD, and let's go ahead and buy at market and chase after 20 pips. Let's just grab 20 pips for right now. And I'm going to go down to the lower time frame right here. I want to take a look over here on the 1 hour. And based on this correction that we've had here, let me see what I've got in already on this. I don't think I've got... Nope, I don't have that in.
Okay. On this trade, Gary, do I get commissions on that, or what's the deal here?
Oh yeah, do. It's absolutely, it's due. So let's do this. Let's just go ahead and throw in a trade right now at market. We're going to go in with, and what I like to do is I want to go in with a cost averaging approach. Buy in exactly at the current market price. It doesn't matter what time frame you're going to go ahead and use. I like to space out my orders 25 pips apart for each other. I like to go in with 5 orders at a time. And all I'm going to do is going to go ahead and capture 20 pips on that net profit. So 20 pip net profit on that. And by the way, I'm already in on 3 positions. So this right here is just another position right here that traders that are not in would want to get in on. And go ahead and say okay to that. So there it is. A buy Aussie CAD right there at market. And looking for just a 20 pip grab. Now, I think if Tyson is correct in his analysis and the market does go ahead and break above that level, there would be another opportunity for you to go ahead and look at another opportunity getting on this. But for right now, quick 20 pips, we should absolutely see this. And I'll tell you why, Tyson and Chris, if you look over here, notice how we had this big, strong rally, and the market's gone ahead and zigzag back down south. You can see right here, it's got a nice little zigzag. So it's due for its rally. This is a good, solid place to go ahead and look to start buying. We're not quite in the oversold condition, but that's okay. But we should see a rally. And if we do dip down a little further down, that's why we put in the cost average, just so that we don't have to be perfectly correct, that we can go ahead and make 1 or 2 errors on our entry point and still make good money. So 20 pips would be an absolute solid buy and a solid trade on this one right here. So Aussie CAD, I like it.
Gary, Chris, question for you, because I like that 20 pips. What do you guys think about this? Do you guys like the trade enough to set up something like Turning Point Max, Perfect Storm Max, Target Trading, whatever it might be, and look for those, kind of harvest that income all the way up to that ultimate target of 90? Are you as bullish as I am up to 94.45 to kind of take 20 pip clips at a time all the way up to that level? I am. What are your guys' thoughts?
Perfect Storm Pro is already running on that same thing, Tyson. Aussie CAD bullish. I've got it running. So it's, I'm going after the price level of 9,600, which is 9,600, 9,650 is where I want to turn it off. That's where I'm happy with the bullish side. But it'll eliminate risk every 50 pips. If it's up 50 pips, distance to 10 away from all the entries and give me, typically my trades close out 30, 40, 50 pips, maybe a trailer. I get a runner. Maybe I'll get 70, 80, 90 pips. But I've got Perfect Storm Pro already set up for that.
Yep. Take a look at this. Grabbing 20 pips just for those traders that thought that 20 pips is not going to make you a whole bunch of money. It absolutely is. This strategy right here is based on 20 pip grabs all the time. And you can see right here that big portion of that was the US dollar CAD, but we're making 1,300 pips just this month alone. If you look at the actual rate of change, we had 11% return on the actual trading. So grabbing those 20 pip profits all the time, as Tyson just mentioned right here, having a strategy that grabs 20% out of the market just because you want to get in and out and not get yourself involved in too much fundamental news that's going to drive the market in these big trends. If you want to grab those 20 pips, making sure that you got your directional bias. But if you get caught up in the wrong direction, be very quick to be able to make a decision as to how far the market can move against you before you should start seeing some type of return, or at least start seeing a reversal. But then also at the same time, when you identify a turning point, make sure that you have managed your risk in the beginning so that you have buying power to be able to get back into the market to get your cost averaging level back down to a level where you can actually still make profit. Very important is there's a lot of strategy behind chasing after 20 pip grabs. You also have to have a backup, and your backup is having buying power, making sure you've got enough capital to ride the wave, but also to rebuy it back in again to go ahead and make some profit on those trades. So it is a great strategy to use. And Tyson, I think that's a great call on that Aussie CAD there. And yep, you can take all the profit on that trade, my friend. All right.
Awesome.
There's another currency pair. That I've been monitoring today. We actually spoke about it today, and I want your guys' thought on this as well. Let's go to the chart right here. I'm going to pull it up, and this is on the I think it was the CAD JPY. Yep, CAD JPY as well as the pound Swiss. If I go to, let's go to pound. Actually, let's do CAD JPY first. CAD JPY right here, we're right at the top. You can see that we've been range bound. Bottoms are right here. We've got tops at the top right here. We have got triples there. So we've got a lot of resistance at the moment right now. Market's really struggling. So what I did today is in the trading room, I actually went ahead and said, let's sell with a cost averaging approach. Let's sell the CAD JPY just so that we can see if price goes back down. If it does go up further, then what's going to happen is the market's going to break out and then we're going to have correction. You can see we've already had some good buying power on this pair already. So if we can get price to go up here without turning over here, then we're still going to be okay for the market to come back to retest the breakout and then turn around and hit and rally. So when I go ahead and trade these support and resistance, Chris and Tyson, I like to go ahead and cost average above that, so that if we are wrong and the market is going to break out, then we're going to continue with this breakout, but then we will make money on the return back to, because the market comes back to retest the breakout. So if we trade it at the breakout, then our first entry point will come back to break even, but the rest of the trades that we've gone in and implemented are going to make profit. So this is a good way to be able to trade these support and resistance levels, and not lose money on if you're wrong and the market does break out. But here's one of them. What do you guys think about that trade? And I'm going to give you another trade to comment on as well, so you can do both at the same time. And that is on the pound Swiss right here. If I go to pound Swiss, take a look at the pound Swiss right here. This is the daily time frame. And what's happening here on the pound Swiss, you notice how the market has gone ahead and dipped, rallied. So this is my correction. I went down to the lower time frame right here, and we actually drew in a setup here on the lower time frame. Check this out. I like this play. Market gone ahead and created this wave 1, 2, 3, 4, and now 5 up here. So we decided to sell here and looking for price to drop back down to take out the low right here, maybe retest this, but we're looking to sell the pound Swiss, just a short-term sell, and probably going to make about 80 to 90 pips on that trade, and then we can make a decision on that. I've also seen that we've got a little bit of, nope, not really. I thought it was flat divergence here, but it's not. But those are the two plays right here, and I am expecting the market to drop on this down to about 125.42 on the pound Swiss franc.
Yeah, pound Swiss is in such a tight coil right now. I see that thing. It's the only guarantee that I know of in the markets, guys, is levels of low volatility are followed by expansions, and this is in a really tight coil for, man, I mean, we're talking 5, 6, 7 months now. This thing is going to break, and when it breaks, it's going to break big. I'm looking at the chart. I like to break to the downside, but I do think there's a lot of money to be made. I think you could look to buy on a break above, 28.50, or sell on a break below 125 or so, 124.50, and this thing could be off to the races.
Yeah, I mean, I was going to ask. Gary, I wanted you to kind of revisit. I mean, you were very bullish maybe 4 months ago on the pound Swiss. I wanted to kind of revisit that story with you, because I like the idea of, even if we came back to 2,500 or 2,450 or back down to that breakout point at 2,250, I still think the pound Swiss has legs to get up to like 32 and 3,400. I mean, you're
absolutely.
The wave cycle
No,
guy, you're the Elliott wave guy. Like longer term, I love this thing going to like 32, 3,300.
Yeah, and this is really not a lot to do with Elliott, but take a look here. Look at the range that we're in here. The market bounced off the support here. We're heading towards resistance, and resistance is at that 133 level. So we do have some inside Elliott structure. Here's wave 1, 2, 3, and then we've got fifth wave coming up here at about 132.40. But I agree with Tyson. I mean, this is range, right? It's a big range that we've been in here since March. But the good thing is, if you look at the smaller time frame, this is a daily. If you look at the daily, you would not want to touch this pair. But if you go down to the lower time frame, there is some short-term opportunities. And this is the sell-off that we're looking at here. It's just a short-term opportunity, because look at the trends, even on the 1 hour. Even though it's consolidated, we are getting some good movement back and forth, back and forth. In fact, this range is anywhere between, let's take a look right here. We've got almost 250. So you've got a 250, sometimes it stretches a little bit wider to 300 pips, but you're looking at 250 to 300 pip range trading right here. And inside this, there's swings. There are absolute swings. I mean, look at this big rally that we had right here. We had a, what is that? A 350 pip rally on the pound Swiss franc. So even though we're seeing range-bound trading here on the daily, if you move it down to the lower time frame, there's great opportunities for traders to go ahead and trade those swings. But I agree with you, Chris. 133 is definitely a mark to the upside. That does mark from about 132.60. Sorry, 132.40. It marks off as a fifth wave target. And if we get to 133, that's holding a resistance based on consolidation on that daily time frame. So we've got big, solid consolidation right there. And it's definitely a target that the market can get to.
Nice.
Yeah. And that is the fifth wave too as well. Yeah. Mm-hmm. So So those are the two plays that I'm looking at the moment right now. CAD JPY, and then of course the pound Swiss franc, and that's just short term. What do you guys think about dollar pairs like US dollar CAD, US dollar JPY? I called a trade on US dollar JPY short this morning. What do you guys think about a short on the US dollar JPY?
Well, honestly, I'd love to get it because I want to stay overall long on dollar yen. Look, I had Perfect Storm Pro pick up buy trades around 109.50. It trailed it all the way up to like 110 plus, grabbed like 55 to 60 pips total. I hope we get another dip because, again, just like Tyson mentioned on the pound Swiss, you can look at this thing for the last 1, 2, 3, 4, 5, 6 months. Lots of consolidation. Two things that I'm thinking about for dollar yen. The Nikkei 225 and the U.S. markets. If we continue to see this risk appetite overloading the markets, I think the dollar yen has one of the biggest open space trades out there. If we break above 111.50, 112, there's nothing stopping this dollar yen to 115 or 118. So I would like to have a dip and a pullback. Otherwise, we might look at this thing in the next 2 weeks and all of a sudden it's like it's off to the races and we might not get a pullback. So I think if we get through Q3, which by the way is this week, right? We end Q3, we start Q4. If we get through this week and we still keep that tone of risk appetite and the market's going to keep chugging along, I mean, dollar yen to me, it's like, I know this is one of my big predictions this year. I could see dollar yen down to 101 or I could see it all the way up to 118. Right now, after this consolidation, I almost feel like with the Nikkei 225 on the path going towards those 30-year highs again, that the Japanese yen is going to continue to stay soft and stay dovish or weak. And I think dollar yen gets bid to 115 to 118. Give it a couple of months, but we're close. I think if we're getting dips now, Gary, I think it's a good short-term sell, but I want to have a stop loss. I don't want to scale in. I don't want to fight the dollar yen. If this thing goes bullish, man, this thing can go ballistic for the next 2 to 3 months and go up 500 pips.
Well, no fear, my friend. No fear. Don't fear.
Yeah.
But if you look over here, this is the thing. I am cost averaging in on this, and we're actually looking for just a 20 pip grab on that. So the US dollar CAD is just a 20 pip grab. We sold it 110.96, and we're looking for just 20 pips out of that. And the reason for that is I've got a very small divergence here. You can see here we've got momentum moving down. I like the way it's gone below the 100 level there and gone back above there. So I like the divergence here. We've got a sell here at the top, perfectly in line to target this bottom right here. So that's about a 43 pip opportunity. 20 pip should be a no-brainer. So we're in on a 20 pip opportunity here. I did scale in 25 pips apart from each other right here. So we've gone ahead and placed a trade this morning, and we're going to see how that plays out. I do want to go back to something here. I just remembered something here, and that's on the pound Swiss that I want to bring up and mention something. Oh yeah. Just so that you know as well, Chris and Tyson, we sold the pound Swiss right here. But what we did is we used a cost averaging, a well thought out plan, right? And the plan was this: we sold at this level because it was the high. We then went ahead and re-entered with the pending order there at the 127, and then we got one at the 144 and one at the 1618 where we doubled up on the 1618. So the reason why we did this is that if the market does not complete this fifth wave and it moves down, we'll make money. But if the market does want to go up and complete the fifth wave here at the 127, we're going to re-enter because we know that the downside potential is all the way back down to this low right here, which is our fourth wave. So we'll probably have about 120 pips in two positions on this that we'll be looking to gain on. But then if we are wrong and there's not a fifth wave and there's an extended wave, and it goes all the way up to the 1.618, then we're going to have multiple entries there, and we're going to have a lot more profit because the target will still be down here. So we've got a much bigger potential if the market does move up. So if we're wrong, we're going to be okay. But if you're right, we'll pick up a profit, get the heck out of Dodge. So making these short-term gains on these type of setups is pretty solid, and it's got to be a thought-out process. Getting in on the market on these cost averaging approaches, you've got to have a thought-out plan as to exactly why you're entering at these levels and make sense of it, because if you don't go back to your technicals and look how the technicals are set up, you're not going to know which levels the market's going to probably want to turn at. And so to get the right entry points, or at least the entries at the right places, check out the technicals and make sure that they're at good key levels of support and resistance. And it could be fibs as well. Thanks, guys, for joining us and listening to the session today. We're going to be back again same time next week. Make sure you guys go ahead and subscribe to the channel. Smash the like button, and we'll see everyone back again next week, same time, same place. This is the team saying cheerio.